Okay, starting here at the beginning, this presentation, and like I say, this presentation is how to wring more income out of a tiny $5,000 account than the rest of your savings combined. And the company is Cash Flow Heaven Publishing. And the specific service, my name is Peter Schultz. The specific service is the winning secret. You'll see why it's the winning secret in a moment. And I just want to say real quickly that if you've seen a lot of these presentations, if you've been to a lot of multi-speaker events, typically what you'll find is there's a whole lot of sales that goes on in the presentation and trying to get you to buy their program. I'm not faulting anybody for that. That's how we make our money as speakers. But in this particular presentation, 90% of it's going to be educational. So if you want to just grab a pencil and paper, take some notes, that would be great. At the very end, I will give you an opportunity to buy our package to get involved if you want to. But mostly, I want to kind of get you on the right track here and maybe teach you some things that you didn't know before. So we're going to divide this into 4 separate little modules. They're not very long, but I think it's kind of helpful sometimes if we divide information up into little bite-sized pieces. So basically, the whole point of this is I wanted to create a way to create passive income that you didn't have to watch so closely, that actually gave you some pretty tremendous returns. And it needed to be safe. It needed to be something that you could count on. It needed to be something that you didn't have to watch too closely. So if you have a job, if you have a family, if you like to go on vacation, if you'd like to do some things besides watch the market all day and be Johnny on the spot and be ready to click your mouse at the exact perfect time, if you want an alternative to that, I think you're really going to like this. The other thing is a lot of people have money in 401k accounts, IRAs, retirement accounts, and naturally, you know, a conservative-minded individual is going to take the vast majority of that money. They're going to put it into, you know, index funds or bonds or something like that. So what I want to do is give you an opportunity, give a person a chance to take just a relatively small amount of their savings and get better returns on it than the rest of their money combined. Now, the problem right now that we're running into is that interest rates and standard dividend strategies produce so little returns that you would need a fortune to bring in any kind of livable income. And right now, the 10-year bond is hovering around 2.5%. The dividend yield on the S&P 500 is around 2%. Now, you probably know that already if you're an active trader. This is what you're trying to get away from. But here's the trade-off. If you want to be an active trader and you want to make some really good money, you're going to have to actively trade. You know, you're going to have to get in at the right time. You're going to have to get out at the right time. You know, you're going to have to make some really good, timely decisions. And what's tough is to get really good returns and still do it passively. That's difficult, but that's exactly what this system is designed to create. So the problem is if you're trying to create some pretty good income, say you've got $5,000 that you want to use, at 2% or 2.5%, that just doesn't produce too much. In fact, getting a 2.5% return on a $5,000 account produces just $10.42 per month. Now, even if you're frugal, even if you're a really good saver, even if you keep your lifestyle kind of at a minimum, I don't think any of us are going to be able to make it on $10.42 per month. So we need to do something different. We need to do something better. Another way to look at that is if you want to just generate a modest $2,100 per month income, it would take you over $1 million, $1,008,000. So we obviously have to do something better. And if you don't happen to have $1 million lying around, then it's more important than ever to learn how to wring big profits out of a small account. And once again, I think it's really important to compare apples to apples here. If you have a relatively passive way to do that, if you have a way to do that that doesn't require a lot of work and a lot of staring at your computer, you can compare it more to a bond. It's not quite like a super active strategy. So the most important part is to learn how to do this safely so that you can trust in what you're doing. You don't want to get into a higher return situation and then find out that, you know, you accumulate a whole lot of losses. That's pretty frustrating. So in this presentation, we're going to concentrate on just 2 things. What is your expectation of success using this system? Your realistic expectation of success in the real world, and how much income can you expect to make? Is it worth your while? So first, let's take a look at your expectation of success using the system. And this brings us to module 2. And that's a really important question. Whether you think you can succeed, in fact, is the most important question you can ask. What are your chances of winning, and what are your chances of losing? First of all, this strategy is based on the Black-Scholes options pricing model, which won the Nobel Prize for economics in 1997. Now, the three gentlemen that actually discovered this piece of math and put it all together are Myron Scholes, Fisher Black, and Robert Merton. They did this back in 1973. Now, Merton and Scholes received the 1997 Nobel Memorial Prize in Economic Sciences for their work. Fisher Black had already passed away by that time. They don't give out Nobel Prizes to deceased contributors, but they do acknowledge them. So what's interesting about when they created this math, it was back in 1973. It's not a coincidence that that's the first year that the options market came into creation, where you actually could have standardized options. Before this, people really didn't know what to price options at. There were options, but they were published in the newspaper, and it was whatever the broker could get for them. It was a real non-standardized market, and it was pretty darn scary to trade those things. So these three gentlemen, we actually owe them a fairly large debt of gratitude, because they made the modern options market possible. So that was created in 1973. They only traded calls for several years, and I think in 1977 or so, they started trading puts. And by the way, it's just gotten better ever since. Bid-ask spreads have narrowed. There's weekly options now. There's some amazing tools that are available to us on volatility and other measurements. So we've never actually had a better opportunity to trade options than we do right now. And when I say opportunity, I mean an opportunity to win, an opportunity to make money. So here's the formula. And it's, like I say, it's so efficient that it made the options market possible back in 1973. Now, here's the cool thing about this formula. If you're not really into math, if staring at formulas like this, you might as well be, looking at something in a foreign language. That's okay. Because what I tell people is you don't need to know all the intricate workings of the internal combustion engine to drive your car to the bank. All you need to know is where the gas is, where the brakes are, how to steer the thing, how to get in and out of it, how to start it and stop it, and you'll be fine. But what's nice to know is that there's a Nobel Prize winning formula behind this. And what we figured out is some really amazing ways to take advantage of that. So there's obviously calls and puts, and you probably know these definitions. Options are contracts to buy or sell a stock or index like the S&P 500, and they can be traded in your stock brokerage account. Now, if you're already an options trader and you go, hey, this is old hat, you're telling me stuff that I already know, just stick with me for just a little bit, because I guarantee I'm going to make this presentation worth your while. So everyone buys options because a small movement in the stock's price creates a large movement in the options price. Option buyers look at low-priced options like lottery tickets. So, like if somebody says, hey, you can buy this 10-cent option and it turns into $1, that's kind of like a lottery ticket. So when I first got involved in options trading, the main thing that I focused on is how much could I make. I had really, big stars in my eyes, and I looked at what some of these options turned into, and I looked at how much they appreciated. And I thought to myself, I was so excited. I was much younger then, but I've always been optimistic. And I thought to myself, oh my gosh, I'm going to be a zillionaire. And I wonder what color my Mercedes-Benz is going to be. And am I going to get the convertible, or am I going to get the sedan? I'm just walking around high as a kite. Well, and interesting, if you're an options trader and you've gotten involved, an interesting thing happens on your way to becoming a millionaire. And that is something that works with options 24/7. It's absolutely unavoidable. You can't get away from it. And it's called time decay. So the minute you buy an option, all other things being equal, it's declining in value. So you have to be kind of right on movement and direction to make good money with buying options. Otherwise, they're going to expire worthless and you're going to lose all your money. And that's actually kind of what my experience was. Because of this leverage, you have the potential for making a lot of money, but option buyers often lose. And here's why. All options have a limited amount of time, so they're constantly losing value, and they all eventually expire. So it's far easier to win selling time. It's also easier picking where a stock won't go than where it will. And I just want to make a super important point right now is we need things to be easy. And, if you're new to trading, you think, hey, you've done good at other things in your life, you're going to do good at trading, you do good research, this and that. Well, the market has a habit of confounding people. It can be super confusing to see all the fundamentals heading in one direction. A company is doing really, really well. They come out with earnings, they exceed all estimates and all expectations, and the stock drops like a rock. And the opposite is true. And you have a few of these experiences, and you start wondering, what the heck's going on. So, it can be pretty frustrating. So what's kind of nice is to come up with a system that's easy. So here's essentially how it works. Is what we do is we sell. Now we have a stock here that's taking off. This happens to be an index. This is the S&P 500, and you'll see that there's some horizontal support right across here, and there's actually some uptrend support. So what we want to do is actually sell below both levels of support. What we're going to do in this case is we're going to sell a put. It's got a short-term expiration, so we can see the finish line right here. The beauty of these kind of trades is there's always a finish line. You know how long you're going to be in the trade, worst case scenario or longest case scenario, when it's going to be over, and when you're getting into it. So you sell a put relatively close, you buy a put a little bit further away. This is called the spread, the distance between these two. That's the spread. And in this case, we do $5 spreads. And since the option that's closest to the underlying is worth more than the option that's further away, it creates an instant credit in your account. So the idea here is to take in money immediately. It's completely different than any other kind of trading because you get your money instantly. You open the position by selling something instead of buying something. And then the idea is to see what is going to happen over the course of that trade. And many things can happen. But one of the things that you're absolutely guaranteed is that that position is going to lose time value. Now it might increase in, because the underlying got closer, but it's absolutely going to lose time value. That's guaranteed. So this is kind of the setup. You sell in the opposite direction, you sell a short amount of time, and you create a spread that creates a credit in your account, and you do this all at strike prices that are very unlikely to get touched. These are called credit spreads or vertical spreads. They're very popular. You might know about them already, but there's some ins and outs here that I'm going to show you that are going to make this more attractive for you. So that's why option buyers lose, is they run out of time before the stock does what they think it will. That happens a surprising amount of time. Even if you do a lot of research, even if you have, looked at the charts, even if you're a good technical analyst, it's just there's so many surprises that go on. The thing that I love about this, and the beauty of it is you have an edge going into the trade. So other things being equal, you're going to win. You can even be a little bit wrong on direction. So, if we get back to our example right here, a stock can do one of only 5 things. And let me see if I can get a little drawing tool here. Okay, here we go. I'm going to get in presentation mode so you can see my full screen, and this is probably something that you're going to want to do anyway. And I'm going to get this little meteorite. This thing's kind of cool. So here we are, and this stock is up here, okay? So we don't know whether it's going to go up or down. It's gone up quite a bit already. If you're a technical analyst, you might say, well, there's a line right here, kind of an overhead resistance line. Here, let me go back. And maybe you think it's going to retrace a little bit, and maybe it does. But we go ahead and sell this put spread underneath this uptrend line. There's only 5 things, and 5 things a stock can do. It can either go up dramatically. If it goes up dramatically, then this expires worthless. This put spread expires worthless. If it goes up a little bit, if it just kind of goes up a little bit from here, it still expires worthless. Now the point of this entire game is for this stock price to cross this line without ever touching this spread down here. That's what we're trying to do. If the stock just trades sideways, if it just goes into dormant mode and just goes straight across, this is going to expire worthless. You're going to keep all the money. But listen to this. Even if you're slightly wrong on direction, You know, you sold this put spread thinking the stock was going to keep going up, and lo and behold, the stock goes down. It still crosses this finish line without touching our spread. You still make money. The only way that you can lose money on this is if the stock reverses and it just goes straight down so far and so fast, it goes through our spread before we hit the finish line. So the point that I'm trying to make is, out of 5 different possibilities here, you're going to win the maximum amount you can possibly win on 4 out of those 5. Those are some pretty good odds. That's why options buyers typically lose. That's why options sellers typically win, because of time and because of the random direction of the market. So who is, you know, when I first started, and I would lose money trading options. And, you know, it was so frustrating because I thought I had the perfect trade setup. I was so excited about it, and I would lose my money. I would think to myself, where is all that money going? Who is getting all my money? And then I would think to myself, you know, there's short-term options traders all over the place, and they're buying options, they're buying puts, they're buying calls, not just in the United States, but all over the world. Everyone loves our markets because of the liquidity. And so I'm thinking, if my experience is being repeated over and over around the world with thousands and thousands of traders and literally billions of dollars, where is all that money going? Is it just stacking up somewhere? You know, by many estimates, 85% of options expire worthless. You know, you think about, you know, we've got options markets now that are in excess of $1 trillion. If 85% of that is expiring premium, my goodness. I mean, if you just use your imagination, you see a stack of money that just goes to the sky. And I kept asking myself, who's got my money? You know, did it just disappear? Where is it going? And after some thinking, now this might be completely obvious to you, but as a beginning options trader, it took me a while to figure out. And what I finally figured out is the options seller is the one collecting all that money. It's not my broker. It's not the market maker down on the floor. It's whoever sold me that option. And after a while, I came to the same conclusion that savvy options traders eventually come to all over the world if they want to stay in the game. And that is to become an options seller. And you do that with about at least 90% of your money. If you want to take a flyer on 5% of your money and buy really cheap options and hope something nice happens, that's great. But for the majority of your money, you want the odds so stacked in your favor that it's going to be very, very difficult for you to lose. When you become the options seller, you have an overwhelming chance of winning by collecting your profits up front and benefiting from time decay. So automatically, you have a big edge. So how do you know what your chances of winning are? Well, one of the really cool things about modern brokerages, and this happens to be Thinkorswim, which is my favorite broker for trading options, is they have a layout here right in the middle of your screen. It says layout. You can click this little drop-down arrow in the lower right, and you can arrange your columns with all kinds of specific headings. The one I pick is implied volatility, probability of being out of the money, and the delta. This is really important information if you happen to be an options seller. So on a trade, you know, that we do, I'm typically going to sell a position with over an 80% probability of winning. Now that's if I just put the trade on and slip on a bar of soap and go into a coma until expiration. If I don't do a thing, I have over an 80% chance of winning. You can see on this particular trade right here, we're going to sell the 2375. We're going to buy the 2380 to create a credit in our account, and this has an 83.16% probability of expiring out of the money. So every trade we do has between an 80 and 90% chance of success. Now that's if you don't do anything. That's if you just forget about the trade once you put it on. That's just the math. Plus, you can trade the strategy from anywhere in the world. You can get an internet connection. So you don't have to be caught in a northern city, even if that's where you're from, in the middle of January ever again, freezing your tail off, you know, getting into a spacesuit before you step outside. If you live down in Georgia, you don't have to suffer through another August where the humidity's through the roof and, you know, you take a shower and you step outside and you got to take another shower within 2 minutes. You know, you don't have to do that. You can go where you want. You can do this strategy just as easy from a little corner cafe within sight of the Eiffel Tower in Paris, France, as you can from your own home office. And you can prove that to yourself by doing some trades, you know, at home and seen that this works, building up your account. You can literally travel the world. You can do what you want, go where you want, and when you want. You can do it from an RV. One entire summer, I challenged all my subscribers. I said, let's do this in the most exotic locations we can find. And if you don't have a bunch of money to travel the world, just jump in an RV or go camping in all the national parks around the country. And a bunch of us did that. And it was so fun to get those emails. And I had people send in photographs of trading from picnic tables. Now you have Wi-Fi just about everywhere you go. It's pretty darn fun to put on these trades, especially when you don't have to watch them quite so carefully. So that all sounds great, but what happens when you lose? And that's a really, really important question to ask. What happens when you lose? Now, if you're a trader, if you've been in the markets, you can talk about your odds of winning all day long, but did you know intuitively, and if you've been trading, do you know from experience that you're going to lose? Sooner or later, you're going to lose. So what happens? Does your account get wiped out? Is there some way to control that? Let's take a look at what happens. When we lose about $150 per contract. And when we win, we make about $100 per contract. That's our ratio. But remember, we have an 80% chance of winning on every trade. So let me explain this. Let me explain what happens when we lose. So you remember back to that chart that we showed where we did the spread. Well, let's just say that stock turned around and it just charged our spread, just went straight down. We're not going to let it go all the way through our entire spread because we would lose too much money. Now we're talking about a $5 spread here. And let's say we shoot for getting $1 credit on a $5 spread. So that means we make $1, we've got $4 at risk. If the stock goes all the way through that spread, we're going to lose that entire $4. That's too much. That's too much to lose. So we set an automatic stop loss at our sold strike. And options pricing theory tells us that if we close the spread right at the sold strike, it's going to cost us $2.50. It's going to cost us half the distance between the spread. Now, if there's a lot of time left on that position, it might cost you slightly more than $2.50. If there isn't much time left, it's going to cost you less than $2.50. But let's just use that $2.50 number because that's fairly accurate. So it's going to cost us $2.50 to close that $5 spread, but we already got $1 in credit. So we subtract that $1 in credit, and it actually costs us net $1.50 or $150 per contract. But when we make money, when the thing expires worthless, we make about $100 per contract. But the thing is if you're winning on 8 out of every 10 trades, that math still works, and it works really, really well as long as you limit those losses. Now, the neat thing about this, the thing that I love so much, is you don't have to be hovering around your computer watching the exact moment to close the trade if the market gets a little bit jiggy, because I'm going to show you how to enter automatic orders so the thing gets taken care of perfectly, whether you're watching the market or not. And personally, that's the way I like to exit trades. I don't want to second guess it. I don't want to have hope. I don't want to be thinking, hey, is this thing going to turn around? If we get the signal to get out, I just want to get out. So with a $5,000 account, we'll only use now this is some money management. This is some things that you might want to take notes on. And I didn't just dream this up for this webinar. This has been, culminating through years of back testing and checking things out and seeing what it takes to survive even when markets get crazy. So with a $5,000 account, we'll only use about 60% of the account at any one time, or $3,000 to start. The other $2,000 is for rolls and buybacks. Now, when we go to close a position and it costs us $2.50 to do it, that's a buyback. So that $2,000 is pretty darn important. If we don't have that money available to buy back, that stock's just going to keep right on going, and it's going to cost us a lot more money. We're going to lose a lot of money on that deal. Rolls is where you close one spread, you roll it either up or down to take in more credit to offset the cost of the close. And that's really important money too. So it's really important to have a little bit of cash laying around for these rolls and buybacks, and also to not risk too much at any one time. So we trade the weeklies with 10 days of time. So we trade about $1,500 per week, and this is with a $5,000 account, and that turns over twice per month. So $1,500 in margin on 2 trades comes to 2 contracts per trade on a 5-contract spread with a $1 credit. Now, you don't have to memorize this math. You can write this down if you want, But believe me, I'll go over this in detail if you're interested in proceeding with the strategy, and I'll make sure that you understand everything, and not just reading and watching videos, but I'll even have, you know, people walk you through what to do. It's, you know, I want everybody to understand this, and I want you to have the greatest chance of making money. And we've kind of got this set up so that it works really, really well. So to make the math easy and to be conservative, we'll lower our win ratio from 80% down to 75%. You know, just to get things more conservative, and let's just say, you know, it's never as good as what people promise. So let's lower that down to 75% and see what happens. With a $5,000 account, you do 2 trades per week, and you know, these are easy to put on. They take like 5 minutes. You enter your automatic orders and you're done. You know, you go to the beach, you go on a hike, you go to work, you live your life, you enjoy your life, and you let the system take care of it for you. So if you do 2 trades per week in a 4-week month, that's 8 trades per month. So at a 75% win ratio in a typical month, you'll win on 6 trades and lose on 2 for a total of 8 trades. Does everybody follow that? We're not going to win on every single trade, but you do have a reasonable, a very good expectation of winning on the vast majority of your trades. So remember, we win 100 on the winners and lose 150 on the losers. Now, if $100 and $150 doesn't mean much to you, you're at a, you know, kind of a higher tax bracket, you have greater monetary needs than that, just add a 0 or 2. So let's just say we win $1,000 on a 10 contract position and we lose $1,500 on a 10 contract position. If that's more relevant to you, use those numbers. But to start, we're trading 2 contracts per trade, so here's what that looks like. We have 6 winners at $200 each. Remember, we're doing 2 contracts. So that's 6 winners at $200 each equals $1,200. We have 2 losers at $300 each, which equals $600. So our net profit the first month with a little $5,000 account, just using 60% of it, is a $600 profit. Now, a $600 profit divided by the entire account, the whole $5,000, equals 12% per month. Now, let's just say you're a big time trader and you like to trade options and you say, well, Peter, I don't get excited for less than 100% or 200%. Look, if you're having good luck with that, I don't want to talk you out of doing that. You know, that's great. Keep doing that. But my recommendation is you do that with maybe 5% of your account, because I know what can happen with the really volatile high risk trading. Reserve the rest of your account to doing something really conservative that you have a really, really good chance of making money. So for this example, we're just using 12% per month, but you know, this is a reasonable expectation. We're even including some losers, and we're even lowering our win-loss ratio lower than what the mathematical probabilities tell us will happen. So here's the real beauty of this system. I'll show you how to enter automatic orders to close your position if it's threatened. So once you place the trade, you're done. You never have to worry about where to exit, because the trade either expires at maximum profitability or it's automatically closed. So let's take a look at that automatic closure again. I really like that because it completely takes our emotions out of it. Let's say that you collect $1 in credit and you think, you know, even though we're selling 10 days, and even though 2 of those days are a weekend, and those 10 days go by pretty quick, you know, the market can get kind of crazy sometimes. It can get kind of volatile. It can get kind of weird. So what can I do to increase my chances of winning? Well, one of the things that you can do is not only can you enter an order that says I want to automatically close the spread if my sold strike is touched, you can also enter an order that says I want to automatically close this spread if the value of the spread drops to a certain point. So you're taking in $1. Let's say it drops down to 20 cents or 10 cents or 5 cents. I can show you how to enter an order to automatically close your position. So with the natural fluctuation we see in the market, where markets kind of bounce up and down, the value of these options changes radically with price movement. And so if 2 days after you put on this spread, the value of the option goes from $1 to 20 cents, maybe you have an automatic order sitting there that closes the trade instantly, removes all further risk, and captures that 80 cents or that 80% of your gain. And that's why I'm showing kind of a money trap here, this bear trap that just grabs the money. And the beauty of this is these are automatic orders that work whether you're watching the market or not. So once again, you can be enjoying yourself, you have obligations, You know, you're probably a busy person like we all are. You've got a lot of things to do, and you want to create this money machine that's just kind of working for you all the time in the background. So you put on 2 trades per week. It can take you 5-10 minutes to do that, and then you let the system make the money for you. So you always know going in what your risk is, and you have a pretty darn good idea of your reward, and most importantly, you have a really good expectation of success. So now we know what that expectation of success is. So next, let's take a look at how much you can make. So this is module 3, how much income can you make? Very important question. So we figured even with losses, even with losing on a quarter of our trades, we figured you could make 12% per month. So let's just take a look at what happens at the end of a year. So this is our projected income for 12 months if each month's gains are reinvested. And this is just starting with a really small $5,000 account. So we start off in month 1 with $600. It kind of gradually goes up. And at the end of the year, we're bringing in very close to $2,100, $2,087. And of course, gradually as our account gets bigger, we increase the number of contracts, so we bring in more money. We're reinvesting that money. Now we're bringing in close to $2,100. So if you remember, you know, if that figure, that amount of money, that amount of income sounds a little bit familiar. If you go back to the very beginning of this presentation, remember when we said we needed over $1 million at today's interest rates to generate $2,100? Well, you've just done that within a year in a tiny $5,000 account. Well, here's what's kind of cool. If you've done this successfully for a year, and that, like I say, that even includes a few losers in there and, you know, this and that and buying back things. But here you've worked your account up to $2,100 per month. If you've done that for a year successfully and you know what you're doing and it doesn't take much time and there's not much risk involved, my suggestion is to just keep on doing that. The kind of cool thing about this is the gains build on themselves. So let's see what happens if you just do this for one more year. As you can see, things get really, really interesting after month 12. Look at month 13, 14, 15, 16, and look at months 20 through 24. You know, if you're an individual, you know, if you take a look at that income after a year and you say, well, $2,100, you know, Peter, that's great. I really appreciate making that extra money, but you know, I've got some real expenses. You know, I've got a pretty big mortgage payment. I drive a really nice car. I've got a payment on that. I've got kids that I'm trying to support or trying to put through college. You know, I need some real money. So what we see here is if you just keep plugging along, at the end of 24 months, you know, you're bringing in over $8,000 in income. Now, if you're looking at this graph right now and you're thinking, you know, Peter, you're crazy. Are you insane? You know, the stock markets don't work like this. You know, we have downturns, we have spikes up. You know, you never have a whole bunch of bars that are even. Well, I grant you, you're exactly right. You're exactly correct. This line's going to be a jagged line. I'm just using some conservative math to show you what happens when you put the probabilities in your favor and you just sort of, all other things being equal, you win most of the time. And even winning what some people, particularly options traders, would say is a fairly conservative amount of money. Even winning a conservative amount of money, but doing so consistently month after month, amounts to some pretty substantial gains and some pretty substantial income in a relatively short amount of time. Now, I'm not going to go out to 36 months. I'm going to let you do that on your own, but it gets pretty crazy. It gets pretty darn amazing. So here's the inspiring message from all of this. If you can get $5,000 together, are willing to learn, and can follow some simple rules, you can have a reasonable expectation of realizing this level of income within 24 months. What would it be worth to you to be able to travel the world following your dreams of adventure while having the ability to create generous income from anywhere? And you know, for me, it's everything in the world. You know, I'm not after Lear jets and fancy cars. I'm after freedom. And this is a system that really allows you to do that. You don't have to be glued to your computer. You can do this anywhere you can get an internet connection. You can even put on trades and go into the middle of the Amazon jungle and not have an internet connection for a few days and still do fine. So now that we've seen how much you can make, let's take a look at how to make this work for you. And this is really important. This is our fourth little module. I'll go over this fairly quickly. I put together a really nice educational package. I think you're really going to like it. And I just want to kind of show you what everything that you get. It's the most complete package. I wish I would have had this when I was coming up. It would have saved me a ton of money. So the key to making this work, of course, is knowledge, having the confidence to know what you're doing and to act on it. And it's super important to me that you're successful with this strategy. So I want to make sure you've got everything you need to do really, really well. And I put together this course. It's taken me years and years to create, and I keep adding new things to it. And inside this course, you'll see how wide of a spread to sell, how much time to sell, what to do if the stock starts getting close to your spread, how many spreads to have on at one time, plus a big section on buybacks, rolls, adjustments, everything you need to trade this strategy with confidence. Now, one of the things that I love about this package is it's not static. You don't just get some videotapes or you don't just get a book in the mail. This is a living piece of education. So as we discover techniques that work, and as you know, if you're an options trader involved in the markets at all, there's new products that come along all the time. There's new strategies. There's new ways to take advantage of the markets to stack the deck in your favor. And what I want to be able to do is add that and have that available to you, even if you bought your package 10 years ago or 5 years ago. So here's a little idea of everything that you get. You get a 161-page downloadable ebook, complete with color graphs, charts, pictures, and everything you need to start trading profitably and stay that way. Plus a 15-chapter video series where you can hear and see exactly what to do to start creating this income. Plus you'll get 14 separate audio files you can download and listen to in your car or at the gym. You can put them on your iPod or your MP3 player or your phone. You'll also gain access to our archived webinars so you can discover new strategies and to improve your returns and limit your risk. And you'll have access to all new webinars for life as an owner of this package. So every time I add something, revise something, put something new in there, you'll get a little email, you'll go in there and you'll have access to it. So it's all available to you on a password protected website, so you don't have some static book just collecting dust on your shelf. You know, it's upgraded as we go. And I think that's important. Plus you'll get videos that show how to set up automatic orders with our favorite broker for spread trading. And these are the videos that really, show you how to set up your trades so you don't have to constantly monitor them, providing peace of mind knowing you'll get out of a trade if you need to at the exact right time without having to watch your positions. So you also get 2 new high probability trades per week. I publish this. This is the Winning Secret trading letter. Comes out every Tuesday evening. Then I even give you email updates during the week if there's some action you need to take or if there's something we need to take advantage of. And I'll even text you on your phone so you know that there's an update. And I try and make it so that you don't have to be all jumpy during the day. I want this to be fairly relaxed and I want you to really enjoy the service. And I always try and pick trades with the highest probability of winning. So I'll show you exactly where to sell your spreads and exactly how to sell them for the possibility of maximum gains with minimum risk. Plus you'll get a bonus, how to trade the weeklies for maximum gains and minimum risk. And this is a 10-module video course specifically on trading the weeklies. The weeklies are a little different. The time decay is a little steeper. They operate a little bit differently. And the weeklies are probably the most exciting thing to happen to options since options were invented in '73. They're amazing. And to make sure you have everything going for you, you'll also get a special link to open an account at the best broker we've found in existence for this strategy. That's Thinkorswim. They're now owned by TD Ameritrade. And we'll put you in touch with our dedicated team at TD Ameritrade to get you special commission rates to save you money while you're learning. This is really important for anybody that just wants to trade 1 or 2 contracts in the beginning and doesn't want to have all their credit eaten up in commissions. So, we've got a special deal for you there. And plus you're going to get the individual attention you need. And we're going to give you an orientation session with a gal named Deanna that just kind of show you around the website. She's going to call you on the phone personally. But this is where you'll really learn. This is a single 45-minute personal coaching session with Alicia. She's our top trainer. She's an absolute genius. I hired her out of the local college here. She had an advanced degree in finance. She's kind of crazy because she's this huge dichotomy. She's this gorgeous gal. She's got tattoos and the whole 9 yards. But when it comes to numbers and when it comes to math, she is just an absolute genius. She teaches me about things about trading. She's the person that I talk to when we go to bat ideas back and forth. And she's going to, part of this package is you're going to get a 45-minute session with her. It's going to be tailor-made to your learning pace. It's just going to be you and her. She's going to be able to see your computer screen. She can show you how to set up trades, how to look for trades, how to take advantage of them, what to do, how to roll positions, how to adjust positions. She can help you no matter what level of trading you're at, even if you're a pro. This session is designed to increase your knowledge, confidence, and profitability. This coaching session, people regularly pay $395 to spend 45 minutes with her because she makes people money. And I'm really excited to include this session in this package. This is a train you don't want to miss. I put everything into this that you can possibly imagine. We've really done a lot of things and gone to a great extent to stack the deck in your favor so you just don't have to worry about your trades. You want to get on board, and the site to go to, I've got a special package available with special pricing, and that's at optionheaven.com. I just want to say that I've sold a lesser package than this for, you know, over $2,000 on cruise ships, at live events all over the world. And you're not going to pay anywhere close to that. And I'm going to include your first month subscription plus your coaching session with Alicia. And it's all going to be at a price that is so good and so attractive. I just want you to go look at it at the website and not have to, you know, even think about it right now, but go take a look. I think you're really going to like it, and I'm really looking forward to making some money together. So thank you for being here. Once again, I think we have a little bit of a time crunch here, so I'm going to turn it back over to Renee. We're happy to answer any questions you have. Just call our office. Everybody that works here really knows the strategy. We really know what we're doing, and they're very, very happy to help you.